Good morning, everyone. Welcome to Pre-Market News and Views by Money Stocks. Today is Friday, June 7th, 2013. Thank you all for tuning in. We're going to jump right into the charts here with the S&P 500 E-mini futures. You're going to see that the futures are spiking a bit, and that's on the back of the non-farm payroll report, which was just released. The non-farm payroll report signaling that there were 175,000 new jobs created in the month of May. So decent little spike. We'll see if the market does proceed to go higher. But right now, futures are up about 7.5 points rather quickly. An unemployment number like this, though, would be bearish for the market if you ask me. And the reason why I say that is because it tells us quantitative easing will have to come to an end. Now, the unemployment rate actually ticked up. I believe the unemployment rate ticked up to 7.6% from 7.5%. But just the higher number in general would make me think that the central bankers are going to be pushed more into a corner to raise rates. Now, I have no idea if this number is real, if this number is bad. Maybe the number had to come out good because there's so many government scandals going on, whether it's the IRS deal, the hacking into the Associated Press, or now we have lately another scandal with Yahoo and Apple and Microsoft and all of them, the government hacking into them as well. So who knows what the real deal is here, but we don't even care. We only care about the market's reaction. And right now the stock market reaction for the most part is positive. Market's moving up 7 points ahead of the opening bell after the unemployment number is released. The one thing I will say about today, it's a Friday. Rarely do we get a down Friday. Last week we got a really sharp sell-off on a Friday, and that was a bit unusual. We were down over 200 points in the Dow Jones Industrial Average. Rarely does that happen, so I don't think they would repeat that 2 days in a row. But one thing I will say, the Shanghai index last night, it was down about almost, I guess, 1.4%. You also had the Nikkei finishing lower even after yesterday's reversal in the U.S. stock market. So Japan finished down, the Shanghai finished down 1.39%, and you had the Hang Seng finish down, which is Hong Kong, down 1.21%. So the Asian markets were very, very weak. We have to be really, really careful going forward. These markets are by no means out of the woods. There could be some bounces in here from a short-term oversold condition, and we did hit some important support levels yesterday, but by no means is this market out of the woods. I also think the better jobs number is actually bearish for the market. It may not reflect it today, but it will reflect it probably in a week or so, because it's going to tell us that the Federal Reserve has to start to curtail or taper their quantitative easing, and that's really what drives markets. We all know that. So again, that's where we stand at the moment. Let's take a look at some other news here today. It looks like there was some more economic data out of Europe, this time out of Germany. It looks like their industrial production increased by 1.8% in the month of April. So that was a little bit better. Yesterday the news was really dire for Germany. So they got a little bit of good news today. I don't know if it's going to be able to trump anything really more than that. The other thing I want to say is that at 3 o'clock this afternoon, you're going to have April consumer credit will be out. That report will be out at 3 o'clock. That's the only economic data that I believe we have besides the job report, which was just released about 3 minutes ago. So we should be aware of that. And then when I look around, it looks like a rather, could be a quiet day. Nonetheless, a good payroll report initially, but you see how the futures are coming back in because the market is saying, hey, if these just job report was good, what is that going to do? That's going to actually make the Fed taper quantitative easing. You also want to follow the Japanese yen, the dollar yen, I should say. And you can see here, the dollar yen is just getting hammered today. So it's down again. It's trading all the way down to 95. You can see just in this last candle, boom, the dollar yen has just gotten hammered. If you look at the U.S. dollar index, you can see that is down also about 37 cents, although it's teeter-tottering around these levels. But in any case, we'll see how this market trades out. I expect a flat to slightly positive day. You never know if we go up a little bit. You did have a pretty good reversal day yesterday, so the market may be able to muster a short-term bounce. But either way you slice it or dice it, this is a Friday, and normally the volume will get very, very light right around the 11:30, 12 o'clock time frame. So keep that in mind going forward. We do have some gap plays today. I believe we have about 3 gap plays already. I'm going to see if I could get maybe 1 or 2 more if the setups are there. We'll post those in the chat room right at 9 o'clock. Just looking over my notes here for a couple of other things. I think I've covered everything that I wanted to cover today. The job report was really the big event this morning, so we'll have to see how that plays out. But I'm really not seeing a whole lot else to tell you about. I try to just cut through all the rubble and just give you what's important out there, and we'll just see how that plays out. Walmart does have an investor meeting at 8 a.m., which Walmart is catching a decent little bid today. It's up a little bit from yesterday's close, about 30 cents. So we don't want to make too much out of that. Other than that, there's a lot of upgrades and downgrades. You can check that stuff out for yourself. I don't see anything all that meaningful. Gap Stores is trading higher, ticker symbol GPS. But again, I'm not going to make much out of that gap. It's really not one that I will play. So we'll leave it there at that. Futures are now making a bigger move. A little bit of a more of a move, trading up about 9.25 points now. So they're getting a little bit more of an upside pop here off of that job report. And again, I have to think, though, going forward, that this job report is not beneficial for the stock market. It may hold up today, it may hold up until early next week. But the reality of it is that if the job market is improving, that's the quicker that the central bankers are going to curtail or taper their quantitative easing, and that's a big negative in my opinion. All right, so we'll see how this plays out. Again, look for a flat to slightly positive Friday, and we'll see what happens here a little bit later. I want to wish you all a great trading day. For those of you in the chat room, and we will see you on the charts in a little while. Take care, everybody.